Welcome back. Alphabet reporting strong earnings and boosted its CapEx plans by $10 billion to $85 billion this year. That big number is increasing shares of NVIDIA and Broadcom today. We'll tell you the reason behind those gains is key. Christina Partsinevelos is here to explain in today's Tech Check. Christina?
Oh, Kelly, thanks. You talked about the ramped up CapEx, which really means pouring cash into servers and data centers for Google. And it's boosting, like you said, Broadcom shares up about 2%. The two have actually teamed up since 2016 to build Google's AI chips for advanced computing, or tensor processing units, TPUs. But reports suggest Google and Meta might actually be pivoting to Taiwanese custom chip designer MediaTek for cheaper AI chip alternatives. DigiTimes, which is very popular in the chip world, says Meta is eyeing MediaTek for an AI inferencing chip by 2027. The Information back in March adds Google's exploring MediaTek as well. Analyst Daniel Newman tells me Broadcom's still very much in the mix, so don't worry about that. But for Google's high-end chips, but MediaTek's cost advantage could pressure margins and signal tougher competition in custom silicon chips. And this isn't just Broadcom's problem, but it could also spell trouble for NVIDIA, too. Custom chips, or they also call them ASICs, can be more efficient for specific data center tasks. NVIDIA's GPUs offer flexibility, but as AI workloads mature, companies may prioritize speed and cost over versatility. NVIDIA's Jensen Huang dismisses the threat, at least publicly, in March at GTC, their graphics or their tech conference, I should say. He said, quote, the ASIC still has to be better than the best. And then just last month in Paris, he added, quote, I'm delighted to hear everybody's interested in building ASICs. All right, I do believe most of them are going to get canceled. He insists that NVIDIA's scale and NVIDIA's CUDA software really keeps its company ahead. Chip analyst Ben Baharin says custom chips take years to scale. Broadcom's bullish pipeline keeps them confident for now, at least for the next 2 years or so. Still, with MediaTek gaining ground, the custom chip race is getting fierce for both NVIDIA and Broadcom, Kelly. Which is kind of the next leg of this whole story, yes? Correct, 100%, but some people are saying it's still 2 years out, and then that's when you start to see Broadcom, MediaTek, Marvell, Alchip, and a few others really start to encroach on this space. All right.
It's truly remarkable how NVIDIA has transformed from a pure-play gaming company to an AI powerhouse. The business has become the cornerstone of a niche that few ever anticipated, as cloud czars race to create the future using NVIDIA chips at its core. Its latest $4 trillion milestone was a message rather than merely a headline. But it's not easy to stay at the top of AI. Additionally, a quiet movement in Washington shifted the game once more, just when some people believed the corporation may encounter a huge speed bump. It's difficult to imagine that NVIDIA was once well known for their gaming graphics processing units. The chipmaker made a dramatic shift to AI under CEO Jensen Huang, and it hasn't turned back since. Its powerful H100 and H200 Tensor Core GPUs are driving the global AI explosion by processing workloads for Google and OpenAI alike. NVIDIA's quarterly top-line earnings have increased threefold as a result, rising from $16 billion in fiscal 2020 to over $40 billion in early 2025. The stock has also surged to unprecedented heights due to this momentum, reaching a brief $4 trillion mark on July 9th. Big businesses like Google promise to spend an astounding $85 billion on AI infrastructure. Additionally, Microsoft and Amazon are integrating AI driven by NVIDIA into their cloud backbones. Along with significant pricing power, that kind of growth provides NVIDIA with the motivation to keep expanding its reach. The White House isn't renouncing its support either. Trump's AI action plan from late July loosened permitting requirements for AI data centers and essentially lifted export limits on NVIDIA's H200 chips. For maintaining America's AI advantage, Huang referred to it as a critical tailwind. With bullish forecasts as high as $250, 38th Wall Street analysts predict that NVIDIA's stock price will reach $182.49 over the course of the next year. If that happens, NVIDIA's value might double from here, reaching $6 trillion. It's also easy to understand why. NVIDIA has a near monopoly on the most lucrative layer of AI, thanks to its unrivaled combination of hardware dominance, full-stack software, and deep developer lock-in. NVIDIA is currently not only the chip leader, but also the king of AI infrastructure, despite rivals' attempts to overtake it. At yesterday's AI summit in Washington, President Donald Trump caused a stir when he acknowledged that he had considered dismantling NVIDIA in order to possibly level the playing field in the market for AI chips. Although the Magnificent Seven stocks have dominated markets recently, Opportunities within these elite companies are changing along with investor and technological preferences. In my opinion, NVIDIA is currently one of the best investments available. NVIDIA has the strongest momentum so far this year, supported by outstanding profit margins and promising profits growth projections. Additionally, a few of them have high rankings, indicating upward revisions and favorable analyst sentiment. Most significantly, NVIDIA is in a unique position to thrive in the upcoming AI boom, which makes them attractive options for investors seeking expansion in a market that is changing quickly. Week after week, NVIDIA keeps proving the skeptics wrong. The company is still the clear leader in AI infrastructure, with its state-of-the-art data center GPUs serving as the foundation for the generative AI revolution, despite worries about competition and valuation. With its hardware so sophisticated that large data center operators have no practical substitute at scale, NVIDIA continues to be the preferred supplier as hyperscaler capital expenditures reach astronomical heights. Performance speaks for itself. NVIDIA has risen 78% from its April lows and is still posting market-leading gains this year, making it the best-performing stock among the Magnificent Seven in 2025. Investors' desire for exposure to the most important technology driving the AI boom is reflected in this unrelenting run. Technically speaking, NVIDIA's stock has once again emerged from a neat bull flag pattern, indicating robust accumulation and paving the way for yet another run at all-time highs. NVDA's combination of industry domination, fast revenue growth, and a chart that shows no indications of losing momentum makes it an appealing setup for both traders and long-term investors. Even while each of the Magnificent Seven is still a leader in its own right, NVIDIA currently presents the most alluring potential. It combines solid earnings growth projections, strong technical momentum, and unmistakable leadership in the AI-driven technological future. So what implications does this have for NVIDIA's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on NVIDIA stock in the comments. Your support truly helps us grow. Now, let's get back to the video. In a recent interview, Nigam Arora of the Aurora Report predicted that NVIDIA's market capitalization might reach $8 trillion. This is how Arora supported his argument. At the time of our aggressive acquisition of NVIDIA, the firm was valued at $300 million because people were saying things like, yeah, maybe AI, maybe not, maybe it's a fad at the time. We were also convinced that artificial intelligence is genuine. Everyone is aware of what transpired now, isn't that right? Robotics is therefore the next big thing. Two different types of robots. One of the industrial robots we already see, such as those found in Amazon warehouses, etc., they will develop significantly, but we are discussing humanoid robots, correct? The type that Elon Musk displays while selling beverages and other items. Thus, it is a future. Although we can't truly forecast the future, we must use some imagination, don't we? According to some assumptions, the market for human eye robots may reach $3 trillion, you know. That market is enormous. You and I will have our own robots, and it might even be larger than cars. So the question is, how does it help you? Of course, Tesla is one. However, there isn't anyone else like NVIDIA who can supply the brains, processors, software, and other infrastructure needed to handle everything, not just the robots at the edge, but also the data centers. NVIDIA was able to disprove the doubters with its most recent financial results and stock performance. NVIDIA's data center computer revenue increased 76% year over year in the most recent quarter, thanks to the Blackwell GB200. The business is looking for fresh growth-promoting factors. Human of Saudi Arabia intends to purchase over 200,000 AI GPUs from NVIDIA, which might result in sales of $15 billion. According to reports, the UAE has a deal for up to 500,000 GPUs. According to NVIDIA, almost 100 AI factories are currently being built, even without China's assistance at this time. These facilities have hyperscalers with 72,000 Blackwell GPUs that deploy 1,000 GB200 NVL72 racks per week. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.